own home by using earned income, which is taxed at source to pay for your mortgage. So when you take that money out, it's not going to be taxed again because it's already been taxed at source. So what we do is we take that money out, the 250,000, we put that money into the SPV, okay, into the property company, and we put the 250,000 in there, and it goes in there as a director's loan account. Now, because we invested the 250,000 as a director's loan account in the business, and we didn't buy the property in our own name, that money can come out again from the property tax-free. So this £30,000 up here that we're making every year is tax-free money, okay? That £30,000 can come out of the company every year, and you can pay yourself £30,000 from your cash flow from your properties into your personal name, completely free of taxes, alongside any other income in your life. So even if you're earning £10 million a year in personal income, this £30,000 would still come out of your property portfolio.